Good day, all. Ira Epstein of Linn Associates on a wild trade day for Monday, the 6th of May, 2019, and this is your financial market wrap-up. So again, the bulls showed up, and on big breaks in these markets, they came in with their buying prowess, and they showed you who's boss. That doesn't mean the markets will stay this well, but they were down, and you were down in the S&P, the Dow, and the Nasdaq. Again, this morning, when I woke up, and it's early, and did my morning subscriber video, you try to make headway for your clientele, your subscribers, as to what you see. If you haven't tried my subscriber videos, you should. It's that simple. I think today's was an interesting one of the more interesting that I've put out, in fact. You had a gold rally today, you had a bond and note rally, and you had a rally at one point that carried the yen sharply higher. So at first, the fear of the tweets about increasing tariffs and so on, the markets dropped and dropped hard. The financial markets went into a tailspin. You got to look at copper prices to realize how deep it was. Copper came back and settled almost, 8 cents off the lows of the day. Now at 4:05 this afternoon, I was watching financial TV, and there they came out with breaking news that the president has authorized Robert Lighthizer, our trade rep, to draw up plans for the tariff that is going to go in place. I guess it's going to be 12:01 a.m. on Saturday morning. So they're not backing off the Trump administration. The question was during the day, would the Chinese delegation even come to the U.S. because of the threats, because of what's going on? The side that we're hearing in America, and remember, I'm hearing this on American TV, is that in the trade negotiations, the Chinese did a major backstep last week, and a lot of it has to do with intellectual property rights and them changing laws, things that are apparently not sitting well with President Trump. He called an end to this. Doesn't mean the negotiations won't go on. They can go on for years. But if they want to not see these tariffs go up, it's put up or shut up time. That's basically what it is. We don't know if the other $325 billion in tariffs will go into place. What we know is the existing tariffs will go up to 25%. The rest, he'll let us know. So what goes on from here is the big question, and how does the market react to that news? Because that came out after the market closed. I can only tell you where we're at. If you take a look at the market, you finished at 29.3240. That's all of what? 9 points off the highs on a closing basis. Certainly not what a bear market's made of. You can see that the market made the lowest recent low that it has, and then came back and settled lower, but well off the lows of the day. When I put on the swing lines, my pattern is one of lower highs, lower lows. That's all I care about. That is a bear pattern. It gets broken if you take out 29.4950, which is about 17 points higher. Where's the market fighting the battle? For those of you that are regular viewers, you know that I have the 18-day moving average that I think is the line in the sand. It is an important number for several reasons. Number one, when a market's up and over it, often it pulls back to it, or if it's way under it, it'll pull back to it and make a decision from that general area what it wants to do next. Can it just roar or break? Of course it could. But more times than not, it'll play around that. That's what I've learned over my almost 5 decades of charting now. The second thing, bias comes from the relationship of price to that number. So when the market closes over it, I say it has an upside bias, downside bias under it. What makes that important, think of it as a filter on the swing line. While the swing line's bearish, it's neutralized because the bias is up. I next look to see where might support and resistance points be. 95% of the time, a market will trade within Bollinger Bands, these black dashed lines. It's an algorithm designed to keep the market trading within it. Now, the longer a market goes sideways in them, eventually it breaks out and stays out of those bands for a short period of time. The band also can take on a different characteristic where it's got a channel to it that's pointing up or down. You don't have that right now. You have a sideways market. So what I was saying this morning was, looking at the Bollinger Band, what I teach is the first challenge of a lower Bollinger Band is where I think the pros take some money off the table, identical to the first challenge of if the market's going up and it hits that number. So today's Bollinger Band, 28.87. Today's low, 28.8350. And by the end of the day, you're 29.32.5. If we take a look at the Junie Mini, wait a minute. By the way, that's what I was saying there. Here it is. That's the momentum. The momentum is correcting an overbought condition. Second, you had momentum that was locked in to what we call embedded. In other words, it had changed its character right here to being a marketplace that instead of overbought, locked in a bull trend. And it means, the way that I teach these slow stochastics, that breaks continue to be bought until you lose. That number, that red number, it's got to get back under 80 on a close. When that happens, often price and the 18-day average make a run at each other, which it did. So it's accomplished that, but it's also a market that's overbought. When either of the slow stochastic numbers are over 70, I say, and I teach, that they're overbought. Both have to be under that number. Here's the action on Friday. Here's today. By the end of the day, you had lost the overbought status. You had hit the lower Bollinger Band and come back and been back to the 18-day average. I view that as an opportunity that the bears may have taken. When you look at the Nasdaq, you never did get back to the lower Bollinger Band. You have the pattern of lower highs, lower lows that is fully negated by the market not closing under the 18-day average of closes. If the market wants to move up, if we take a look at this low, it was 76.82 and that was Thursday. You went higher on Friday. Today you came down to 76.6750. So this low is under that low. Even if you take out the highs of Friday, is my point, you can't end up in an uptrend. What about the downtrend? Just close under the 18-day average and you're there. Momentum is already pointing down. So if momentum's going to lead the market, that's what we'll take a look to see when we reopen tonight. In the Dow, I'm going to tell you the same thing I'd say on the S&P. If you drop down to the Bollinger Band, it's where I'd expect the pros to take some money off the table. Or if you rally back up to it, it's what I'd expect. The news, obviously, last night was not good, and the market dropped. Hits the lower Bollinger Band, 26,169, finishes the day at 26,405. I still think the pros were taking money off the table there. The Russell's in a different world. This was the weak sister of everything. It's now the strongest acting. It went back to the upper Bollinger Band. It did it on Friday. It's done it today. Didn't even try the lower band. The pattern in this market has been one of higher lows, higher highs. It is independent of those others. It is overbought, but it's in an uptrend. In the VIX, the question now is, will the pros get enamored enough to sell the upper Bollinger Band, which they normally do? I don't think they did it today. And the reason is they had the news of the president's tweets and they might have stepped back from the market. I don't know that that's still going to be the thing. I think that they may just step back in, trying to look for this 18-day average from this rally. We'll see. But remember, they had an edge on it. They had a piece of news and they didn't have to step in. In the T-bond market, I think the pros come out against upper Bollinger Bands, especially after you come back, get down to the 18-day average. Think of a pinball game. You ever play one and you're shaking it and it goes into tilt, right? There's typically a button, electronic or the old style, where you do a reset. Hitting that 18-day average means all these numbers become active. It's not like you hit them and you just keep going and it's like knocking down a resistance point. The market went up to it, and that's where I think the pros came out of the market. Now, the bullish number is still in play at 147.4 for the bulls. You'd have to take out 146.21 to break the bull pattern of higher lows, higher highs. In the 10-year note, I think the pros did the same thing right here at the upper Bollinger Band. This is Friday. And again, it doesn't matter to me where the Bollinger Band is. The first time it's hit, upside or downside, I think the pros are coming out. As you can see, you hit it, you came back, you were fighting at the 18-day average. You finished Friday at 123.11, just over that 18-day. You go up to the number, and you gave up most of the gains today. TLT, the same thing. Higher lows, higher highs. Today's high, 124.38. You just missed hitting the upper Bollinger Band. You're overbought. I wouldn't be surprised if pros were taking money off the table. The dollar index, it's looking to do something here. It's got a pattern of lower highs and lower lows, but it is closed over the 18-day average since it's developed this pattern, which was confirmed today. Any close under 97.17 puts the bears, in my opinion, back into control. You'd have lower highs, lower lows under the 18-day average and momentum already pointing down. In the euro currency, you still have the lower highs, but now you have higher lows. Do you see that? All of a sudden, this market's not trending. I define a trend as having either in an uptrend, higher lows, higher highs, or in a downtrend, lower highs, lower lows, but the combination of lower highs and higher lows is not a trend. The 18-day average looks like the resistance point. If you were to take out Friday's low, you're back into the downtrend, putting into play the lower Bollinger Band. Right now, the 18-day average offers the first resistance. Any move over 113.10 with this pattern staying intact of the higher lows actually creates a bullish pattern on the chart. British pound. On Friday, you got right up to the Bollinger Band. Again, that's where I think the pros took some money off the table. The first challenge of that, Japanese yen. I realized today what it did. Doesn't mean that I wasn't saying to my subscribers the same thing I'm saying to you. The first challenge is often where the market runs into problems. So that number is 90.4930. You finished 90.46. Okay, are you going to be able to continue up from there is the big question. In Bitcoin, back to the upper Bollinger Band, stalling out in an overbought condition, void of a trend, lower low, higher high. Now, Bitcoin got some good news in that Fidelity is joining into the parade. They're not going to let John Q. Consumer buy this market through them, but they are allowing institutions to start playing it. In July, now I'm switching gears on you into the July contracts. I'd like to get an apple to an apple. So July Brent versus July WTI. You're right back up into that zone of what? Well, think about it. It's the Abraham Lincoln strike force with the carrier and everything that goes with the carrier and the strike force is now in the Mideast. We've put Iran on notice. So what market comes under attack? Brent. So the Brent jumps up right back to the 18-day average. But what did it do first? I want you to look at this. The market's in, lower highs, lower lows, the Bollinger Band's in play. Market goes down to it, pros covered, you went right back to that line in the sand and you halted right there. What about WTI? Well, in all fairness, WTI had been at the Bollinger Band and this was Friday's action. So today getting to it doesn't mean anything. The question is now with this reversal up, does the market go anywhere? On this chart pattern, it does not turn bullish. It can go straight up, but it's still not bullish because you'd have a lower low and a higher high. That's my opinion. Gasoline. Market's got lower highs, lower lows. If it drops down, and on Friday it did close under the 18-day average, momentum's down. If you're bearish, you should be looking for the possibility that market gets to the lower Bollinger Band, where what I teach is the first challenge of it, it would be a cover zone. Hits it, as you can see, that's today's action. Nat gas is not part of all this. Natural gas is waiting on weather events. It went back to that line in the sand and failed, but it's not a trend. You got a higher high and lower low. Momentum's flat, a difficult market. So we write about all this for you. And what we do is we cover all the markets you're going to see here. We write about it for futures traders. We cover options trading. We're going to cover ideas on spreads. We're going to cover futures, obviously. Be you a commercial, be you a speculator in the market, what an end user could be, a producer, doesn't matter. We cover these different areas and we write in a way that we think it's easy to understand, yet full of detail. How do you get this if you haven't seen it? Because this is what our clients get. And you can get a free trial, but you can't keep on it without being a client of ours. You can give us a call. You can go to our website. And on our website, you can sign up for all the other offers, including my own research that goes out hand in hand with that. So how do you get it? You can click up here. It'll take you to that page, or you just take advantage of that. In the meantime, I'm Ira Epstein. You have a good day, and I'll talk to you tomorrow.